My experience has been that precious metals bull markets are established by gold. It's the fear buyer.
Yeah.
And when the momentum in the gold price attracts generalist investors to the space,
Yeah.
market leadership changes from gold to silver. This will be the fourth time in my life that this occurred. It looks like in the market that transfer is taking place as we speak. Whether or not that's true, of course, time will tell. When leadership transition does take place, silver outperforms gold pretty dramatically. And the high quality silver stocks outperform any other extractive asset class I know. I hope you paid attention to the part where I said high quality, though.
Yeah.
There are a lot of purported silver companies that litter the speculative landscape who unfortunately have no silver. Those can uniformly be expected to do well too for a little while, but they're treacherous places to be.
Yeah, and we've always seen this with rallies, though, haven't we? Well, I'm sure we're already seeing some more silver names prop up as well. We saw it in lithium. Everyone turned into a lithium company when the price rose. So I'm sure that will be happening. But what I've heard in the past as well is that when we do see that silver price start to rally and pick up, and everyone's, your barber's talking about investing in silver stocks, that's probably a time where you should probably be more cautious. Are we there yet?
Oh, not close.
No?
No, not close. These are truly dramatic runs. And I'm not saying it has to happen. I'm just saying that 3 times before in my life it has happened. And I'm hoping at age 72 it happens to me one more time. But let me give you a couple of arithmetic stories to warm up your audience.
Okay.
I came into the business in the 1970s, the most dramatic precious metals bull market in recorded history. One little silver company, then Coeur d'Alene Mines, now Coeur, started 1970 at 10 cents and ended 1981 at $65. Now, I was too young, too dumb, too poor to pay attention. But in the little rally that we had in the first part of the decade of the 90s, I helped float 2 silver companies, one Silver Standard, the other Pan American. They went from 72 cents respectively to $45, 72 cents and 50 cents respectively, to $45 or $46 in the space of 6 short years. These are truly breathtaking moves. They are not to be done with money that you had set aside for a child's college education. Yeah. But they are the kind of moves that can take mad money and turn it into real money.
Okay, so in terms of where we are in the cycle at the moment, because I can't think of any silver companies that have done that dramatic of a move yet. Are we still fairly early on in this cycle, in your view?
I think we are. We haven't had the type of move in the silver market that would allow the senior producers' margins to increase as dramatically as the gold producers have. The strength that we've seen in the gold market for the last 18 months has a lot to do with the fact that they're making so much money. Yeah. The silver guys haven't had that happen to them yet.
They must be getting close, though, don't you think?
You bet.
Because let's have a think. So most silver companies, what's their ASIC? Around $15 to $20, would it be?
Well, that's a trick question, because only about 18% of primary silver supply comes from silver mines. Right. 82% comes from copper mines or lead mines or zinc mines. One could say, as an example with Freeport-McMoRan, that their cost to produce silver is 0 because their mining costs are paid for by copper. They just have to strip it out of the stream. The real silver producers, the Pan Americans of the world, the Fresnillos of the world, the Buenaventuras of the world, the real ones, are nominally $20 producers. But
so their margin now is almost 200%.
Margin's good.
Yeah.
The margin's good. Okay. Now, it is likely, although not certain, that one of the ways that they got through periods of low silver prices was by producing at mine grades that were higher than the average reserve grade. That's a fancy way of saying they high graded. Yeah. And that will impact their results for a couple of years going forward, because it is unlikely that they haven't picked the eyes out of some of the pockets they've
The
mined.
ore body that they're in at the moment.
So you have to deal with that.
Yeah. Okay, but so relatively though, we are getting very close to a point where the silvers, in terms of margins, must be catching up with the gold guys. So if most gold companies are making AISC of around what 1,500, 2,000 on the high end, that's anywhere between 100, 150, maybe 200 if you're one of the lower guys. On top of silver guys are pretty much there, right? So is this why we're now starting to see that shift into silver juniors and silver?
Right now, the move in the silver juniors isn't fact-based.
Yeah.
It's moved around silver in the anticipation that the stocks will do well.
Yeah.
For it to become real, the market is going to need to see a bang-up quarter out of Hecla, or a bang-up quarter out of Core, or better yet, both.
Yeah.
A bang-up quarter out of Pan American, and they're going to see that. It's important to note that most of the real silver companies are gold companies in drag. More than half of their revenues are gold, but they're still extraordinarily leveraged to silver. It's important to note too that while gold is not merely at nominal all-time highs, but probably in constant dollar all-time highs, silver is far from an all-time high. $57 comparing to 50 forgets the fact that 15 years has passed since the last time they were at 50. The dollar's deteriorated.
The first time silver hit $50 was what, back in the 70s, wasn't it? So nominally, based on that,
It's probably 220, 225.
yeah, true. Because we were talking the other week, right, back in Zurich, and you were saying that you sold 25% of your portfolio, limited or basically got rid of your downside completely. You were investing in Agnico, from memory, Wheaton, Franco, physical gold, and then some oil and gas stocks.
Right.
Are you not tempted? I mean, you're talking about back when you first joined the industry, you saw some silver plays go from cent stocks to $45 stocks. Are you not tempted, or are you already positioned in silver?
I've got a good position. As you know from earlier interviews, I love hate.
Yeah.
In 2021 and 2022, the junior silver stocks were hated.
Yeah.
I mean, truly hated. It was very clear to me at that point in time that Wisla was going to be a mine. And nobody wanted it.
Yeah.
The consequence of that is I didn't just buy it, I bought a lot of it.
Yeah.
And so, I would suggest that in the silver names that matter to me, I've got plenty.
Is it too late? Because sometimes, like, one of the things that a lot of people do is that they'll look at, in a market at the moment, you'll look at like a Fresnillo or a Hecla or whoever, the big producers, even the big developers like a Vizsla, and will be at all-time highs, and their stock price will be at all-time highs as well, and you'll think, blimey, I've missed the boat.
I think arithmetically, no, but that depends on the individual and his or her time frame and their tenacity. I've become very patient and very tenacious, not because I don't wish for instant gratification, but because I've learned over 50 years in the markets that instant gratification is not on offer.
Right.
An investor who is prepared to stay the trade for 5 years is by no means too late.
Yeah.
Let's look at the arithmetic. 2 interviews ago, not the one in Zurich, but the one before that, we talked about the fact that I believe that over 10 years, the US dollar loses 75% of its purchasing power.
Yep.
If it does that, I would expect that gold would maintain its purchasing power, which means that over 10 years, I see gold in nominal terms between 3 and 4 times higher than today. In prior bull markets, once the crossover has occurred, once silver begins to outperform gold, the performance in silver is roughly double the price of gold. I'm not saying to you that silver is going to go 8-to-1. What I am saying is that a move higher in silver, from my point of view, is statistically extremely probable.
Right.
If one looks at history too, the higher quality silver juniors outperform the silver price 2-to-1. So if you follow that arithmetic progression, what I'm saying is that there's a possibility, if not a probability, that over 10 years, a portfolio of high quality silver juniors could give you a 20-to-1 return. Your investors shouldn't think in their mind, Rick Rule just said that Amalgamated Moose Pasture Silver is going to be a 20-bagger. I'm not saying that. I'm saying if you follow the arithmetic progression, that there's a very good probability that a carefully chosen portfolio of high-quality silver juniors has the potential for persistent and tenacious speculators to generate a life-changing event.
One of the numbers that you gave me last time was about 75% degradation in the purchasing power of the US dollar. I think you came up, what was the gold price figure that you came up to, or did you not give me one?
Well, what I said was that I expect that gold will maintain its purchasing power.
Yeah.
If the US dollar lost 75% of its purchasing power, and the dollar maintained its purchasing power, that would suggest a 3-fold to 4-fold increase. It's simple math.
Okay, so potentially $8,000 to $12,000 gold.
Yeah.
Over a 10-year period.
I would be surprised over a 10-year period if the gold price wasn't measured in 5 as opposed to 4 digits.
Years ago, I used to watch interviews of people say the gold price is going to go to 3,000 or the gold price is going to go to 4,000, 5,000. And I've said this before on the channel, I used to think these people were barking mad. I generally thought they were nuts. And then it's funny how times change, especially when you're in a bull market. You say 8,000 to 12,000. I don't sit here and think that's outrageous. I actually think it's probably more of a likely probability than not.
Markets are shaped by narrative, but investment decisions should be shaped by arithmetic. So let's look at 3 different pieces of math. The last period of major dollar instability in my lifetime was the decade of the 70s.
Yeah.
The US dollar again lost 75% of its purchasing power, and gold went up 28-fold. If you had told most people, myself included in 1970, that gold was going to go to $800 from 35, I would have accused you of smoking a then illegal substance.
Right.
You know, the second piece of arithmetic is simply that number, the deterioration of the US dollar. We covered in a prior interview the debt owed by the US government and the ability or the inability to service that debt. The inevitability that they inflate away
well, they have to.
their unfunded liabilities. So, those are 2 important pieces of math. The third piece of math is this. While gold is performed in a way that you and I understand, most of the investment community still can't spell gold, despite the fact that it's a 4-letter word. It is very, 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 very underowned.
Well, especially in Western institutions, 100%. Yeah, no, agreed. One of the things that I've always find really exciting about your investment strategy is, you mentioned it earlier, was that you love hate, right? So it's a great way of looking at it. As someone who's been in the industry for a while, you understand the cyclical nature of it, and that most metals, that when they are down, they inevitably will come back up, because, like, as you've always said, cure to low prices is low prices, right? We've spoken about the fact that you've been investing in nickel. You were investing in uranium years back when everyone hated uranium. Have you, and do you care about lithium at the moment?
I don't.
You don't?
I think that maximum hate in lithium will occur in 2027 or 2028.
Okay.
The little increase that we've seen in the lithium price has given hope to the lithium market.
Yes.
And the market has to be hopeless for it to be hated. Okay. There's arithmetic around lithium, too. Most people think we had a lithium shortage, and that's why the price went up. That's wrong. We had a shortage of lithium processing capacity. In that so-called shortage, both Albemarle and SQM had 80 or 85 years of reserves. There wasn't a shortage of elemental lithium. When the price went up, people piled into the lithium market looking for lithium, and they found a lot.
Yep.
Probably 150 deposits. Maybe 5 are viable. So the investors in the other 145 have 2 more years to learn hate.
Right. Okay. Okay. So, and then I guess from your view, is that realistically the year that, in your mind, that we start seeing a shift in process hydroxide requirements that we're going to need past that point? So that
I think we've done a very good job of debottlenecking the lithium supply chain. To the extent that treatment charges are falling fairly quickly. What will happen, I think, 2 years from now, is that, first of all, the investment community won't segregate between 145 large projects and 5 lousy projects and 5 good ones. Yeah. That's what hate does. People hate lithium, so they don't segregate between good projects and bad projects. And you'll be able to buy the good projects at a bad project discount.
Yeah, well, we're seeing that with nickel right now, though, aren't we? I mean,
Absolutely.
it's
Absolutely.
incredible.
When that happens, with one caveat, if the technology around direct lithium extraction doesn't work or doesn't work well, then you're going to have a great game. I mean, a truly, truly, truly great game. You will have, as we had in uranium, as we had in silver, you will have $2 billion net present value deposits selling for 50 or 60 or $100 million.
Yeah, I guess we'll then start relying on spodumene deposits a lot more, wouldn't we? And that would be, but yeah, we'll see. Because I've been hearing for, I'm sure you have, for 5 years that DLE is going to completely change the industry, and it still hasn't quite happened yet, right? So,
it's difficult for, I don't understand enough about DLE technology to opine. What I do know is that some fairly advanced companies, Berkshire Hathaway, Chevron, Exxon, are working on it.
Right.
It's a strange bet for a guy like me to bet against Exxon.
Funny you mentioned that, because obviously we were talking earlier about you reallocating capital into oil and gas companies, and we spoke about that in Zurich. Something I never asked you in Zurich, and I hope you don't mind me being too forward, but what sort of companies are you investing in the oil and gas space?
I'm happy to share names.
Yeah.
First of all, oil is so hated, and it's such a good business that you don't have to move too far down the quality trail to get good value.
Yeah.
You know, my life has been all about hitting the market where it wasn't. And usually information asymmetry meant that small cap companies sold at bigger discounts than big cap companies. In the oil business, that's not true.
Right.
So I've concentrated my investments on Exxon.
Okay.
Why
Exxon?
I think Exxon is selling at about 60% of their net present value at $60 oil. Most of the industry is deferring sustaining capital investments, which doesn't affect them in 2026, 2027, but it really affects them in 2028. Exxon isn't merely maintaining sustaining capital investments. They spent $60 billion to buy Pioneer, and they're spending $25 billion to drill out Guyana.
Yeah.
So while other people are returning capital to shareholders, Exxon's doubling.
Okay.
When I benchmark billion-dollar market cap companies, small companies that I think are attractive, against Exxon, I notice that the discount in the little companies isn't materially greater than the discount on Exxon. And with Exxon, I have almost no risk and a 3.75% dividend while I wait. It's difficult. Despite that, there are other companies that are high-quality companies that are cheaper than Exxon. So I've been buying them. I'm attracted structurally to U.S. natural gas. So I own Devon in the mid-continent, and I own Equitable in the Marcellus in the Northeast. I'm more attracted to Canada, where I face political risk. The Canadian federal government, the Laurentian elites, are biased against the best industry Canada has, which is odd, but true. So there, I want the finest companies.
Yeah, I can see what you're saying. We've got, obviously in the UK, obviously we've got the North Sea oil.
Yep.
We have basically attacked them into oblivion, where it's now no longer profitable for us to.
I mean, it's total insanity in the North Sea. There's all this infrastructure built out.
Yeah.
Because of the infrastructure, you have the ability to develop 100 million barrel pools where it used to require 1 billion barrels.
Yeah. Well,
and now your government's walked.
Yeah, no, it's such a shame, really. It's like I went to Aberdeen, which is the heartland of UK oil, and it's just so sad seeing that city sort of degrade in somewhat. I mean, see a house pricing collapse and whatnot. Jobs are leaving the area, but not even just that. I do worry with Canada though. We're going for someone like a Mark Carney type figure who's very eco-sensitive. There is a risk there. I don't know. Do you think there's a risk of that happening in Canada?
Yeah, I think there's a huge risk.
Yeah.
Unlike Mr. Carney's predecessor, Mr. Trudeau, who is innumerate. He just was innumerate.
Yeah.
He was all about narrative.
Yeah.
Mr. Carney is good at math. He can add and subtract. He can multiply and divide. He's proposed a budget for Canada, which is absurd.
Right.
But he knows he has to pay for it. The only industry that Canada has that can make a dent is oil and gas. Just last week, he announced his support for a new oil pipeline to the north coast of BC. It's not because he's changed his stance on carbon, it's because he's broke.